It's the leading market share in ransomware, and that's publicly known.
Right.
You know, it's the token of choice for ransomware.
This is how much has been money laundered with Bitcoin. This is how much. This is Bitcoin. This is dollar. And then I think about how many things can be used in a deleterious way. Of course, but that has nothing to do with the underlying thing that you're using itself. I mean, I can go run a car into a parade and run over 40 people. That doesn't mean we shouldn't have cars.
On Wednesday, SEC Chairman Gary Gensler appeared for an interview on CNBC, during which he discussed a number of topics, including Bitcoin, the progress of spot Bitcoin exchange-traded funds, decentralization, the prospects of spot Ethereum ETFs, and crypto's rampant use among cybercriminals. While he doggedly maintained the narrative that investors need to be protected against the high risks associated with cryptocurrencies like Bitcoin, Gary also sought to establish a difference between the ETFs and the underlying asset. According to the SEC Chair, the regulator has done its due diligence on the ETFs to ensure investors are sufficiently protected. Gary's thoughts about Bitcoin are not as pleasant. However, CNBC's Joe Kernan does a great job of exposing Gensler's hypocrisy as he consistently calls him out on his unwarranted bias against Bitcoin. Before we get to Gary's interview, here are some quick updates from Bloomberg ETF analyst Eric Balchunas. In his latest updates about the spot Bitcoin ETFs, the senior Bloomberg analyst focuses on some impressive milestones BlackRock's IBIT has made this week. The first tweet reads, "IBIT is popping off. It took nearly $500 million all by itself yesterday, showing an unusually strong second wind for a new launch. It is now over $5 billion, which puts it in the top 7% of all ETFs by size in just 23 trading days." In another tweet, Eric wrote, "More unusual second wind strength on display from IBIT, which has broken its weekly volume record, and it's only Wednesday, with an average of $760 million per day. That's the top 1% numbers. Volume is also a good predictor of inflows for newborn ETFs, given there aren't many existing owners to sell. The reason this is interesting and unusual is because early on, IBIT's volume was correlated with GBTC outflows, and perhaps to any lined-up cash BlackRock had. I thought all that would wind down a bit in unison, and it started too, but then IBIT broke loose. These unprecedented activities in BlackRock and other ETFs are clearly reflected in Bitcoin's price. At over $52,000 per coin, the leading cryptocurrency is trading at its highest price in over 2 years, and experts are predicting further price jumps in the coming weeks. In fact, one expert believes his model is 99.9% accurate, and it has cracked the exact date Bitcoin hits $1 million per coin. If you don't want to miss this extremely bullish prediction, which is backed by math and science, please ensure you stick around to the end of the video. Also, give this video a thumbs up, subscribe to the channel, and turn on the notifications bell for more videos like this. Thanks, and enjoy the video.
We focus on investor protection, and of course the issuer is raising money. So this product, we've had similar products in gold and silver, ETFs, you call them. They're technically exchange-traded products. We approved a group of about 11 at one time. This was not the first way you could buy or express a risk in Bitcoin. But as we like to say, we're merit neutral. This was not in any way like an approval of Bitcoin. That existed. It's just how to trade it in these exchange-traded products.
In merit neutral, I think it's a little less than neutral, Mr. Chairman. It almost was, we called it grudgingly when you finally got it. From the court case sort of forced in. Is it really just neutral, or wasn't there a little bit of a, we're not sure about this thing, and buyer beware?
Let me say it this way. Yeah. We're merit neutral if somebody's complying with the laws. Okay. So if they're giving full, fair, and truthful disclosures to the American public, who gets to decide on their investments.
But you're so smart. You're at MIT, and people listen to your what you think about Bitcoin, and it is troublesome to me if I look at it and I see all the merits of it, and someone that taught about it and understands it seems to have an opinion that maybe it's, pet rockish or something.
I get your words about pet rocks and so forth, But I think we also have an investor education responsibility at the SEC, particularly about those investments that are non-compliant with either the securities laws
or
commodities laws and so forth. So here we have an asset class, all of these 15, 20,000 crypto tokens,
yep.
Many of which, without prejudging anyone, many of which are actually something called investment contracts or securities, and the platforms upon which you trade, the intermediaries. Right. They're not like in this building, NASDAQ, that has protections and against fraud and manipulation and the like.
Just seen people lose their shirt on with NASDAQ stocks.
You can lose because there's risk. Right. There's risk in investments. But what we try to do as a society is take some of the fraud and manipulation risk out of the markets by regulation.
Is that the problem, though? It's not necessarily Bitcoin, the underlying asset, but more the froth and the potential for fraudsters to use it that has been
this is a field, Becky, that's been rife with fraud and manipulation. And look at all the bankruptcies. And you've had on this set people talking about those various bankruptcies. And it's not just one entity. It's entity after entity after entity. And then investors are just lining up in the bankruptcy court.
This is how much has been money laundered with Bitcoin. This is how much. This is Bitcoin. This is dollar.
It's the leading market share in ransomware. And that's publicly known.
Right.
You know, it's the token of choice for ransomware. Joe, if I can say, the US dollar, the euro, the yen, you have the whole society using it as a medium of exchange. We buy our cups of coffee, as I see here. Right. We get paid in dollars or yen or euro. And you have a whole central bank and support for one currency generally per economic region. That we don't have here. So there is a very real economic difference.
Which is part of the attraction, since it's decentralizzed, and you can't have a profligate central bank.
It's not that decentralized, Joe.
Well, I know you're saying because of the ETFs, but really it is.
No, it's not that
decentralized
because look how finance tends towards centralization since antiquity. Right. So what do we have? We have a handful of 3 to 6 core so-called crypto
I understand,
exchanges.
but the asset itself, the way that
that's
the
how
distributed
the accounting ledger.
Right. That's how the ledger. And
now, how many times do you have people on this show that say, "I want to invest in something because how the books and records are kept"? I mean, Joe, really? It's just an accounting ledger, a clever.
It's a ledger that everyone has, and can't be double counted. It's almost immutable. That's why people think it has inherent value.
So you trust it more than an Oracle database, or you trust it more? I trust it more than a lot of
the Bitcoin bulls say they trust it a lot more than the central bank that enables the fiscal authorities to spend money to the tune of $33 trillion. And then I think about how many things can be used in a deleterious way. Of course, but that has nothing to do with the underlying thing that you're using itself. I mean, I can go run a car into a parade and run over 40 people. That doesn't mean we shouldn't have cars.
Please share your thoughts on Gary's futile attempts to reduce Bitcoin to nothing but a tool for criminals. As promised earlier in the video, astrophysicist Giovanni Santostasi, a former physics professor at McNeese State University, believes he knows the exact date that Bitcoin hits $1 million per coin. Giovanni uses the Bitcoin power law model, which he created in 2019. This model, ultra bullish model, attempts to map Bitcoin's long-term price appreciation on a log-log scale, showing how both price and timescale exponentially on both the vertical and horizontal axes. Giovanni believes his model has been amazingly accurate so far, almost perfectly capturing the range of Bitcoin's highs and lows. Many didn't believe me and said the past doesn't predict the future, the former physics professor noted in a Reddit post last month. Well, after 5 years, it turns out that Bitcoin continues its power law behavior with a similar exponent. We will now bring you clips from the professor's recent interview with Crypto Nutshell as he gives his peak predictions for Bitcoin during this cycle, the bottom for the next cycle, and when Bitcoin could hit $1 million per coin.
So usually the peaks are about the end of the year, and so this is going to be the end of the middle or end of 2025. So
yep.
Start of 2026. So it's not perfect, right? So you see It oscillates a little bit, where exactly the peak is. But around that time, and it's going to be close to 200,000.
Awesome.
And again, this assuming that there is this decay. Now, it's possible that there is not a decay, and so it's going to up much more. But, guys, I'd rather hope for 200,000 and base it on some kind of math, and then see 500. And that will be the first one to say, okay, great, right? Because I don't think the model will be broken. It will be simply, this component will not be right? That we don't have a decay here. But I still think it will go back to exactly doing what it does during the bear market. That is good news, because you can see even during the bear market, we're simply going up, right? So, and that bottom should be around 16,000, something like that.
Okay,
so
interesting.
After the peak here around 200, we will never see anything below 60,000 for Bitcoin.
Wow.
But it's again crazy.
And
then 1 million by 2032, something like that, in cash and buy. But the model said perfectly, you're crazy. We are in above the red territory. Go out. But I didn't believe it. I thought this time is different. It's never different.
Everyone goes. It happens to everyone. Everyone goes through that.
Yeah. Now we have a tool, right? Now we have a tool. We have a tool, and we should use it, right? So please, guys, use the tool. This is why I'm doing this. I'm not doing it for likes on Twitter. Even if I like you to like me, but I do it because I think it's useful. People should know about this, and believe me, very few people still know it. Because the non-Bitcoiners have no clue, absolutely no clue. They think it's still random stuff. They look at that first chart I show where there is no pattern, But look at this. Though it's not crazy.
It's insane. It's insane. Now, you said you didn't believe it back then. What is your conviction in it that it's following a power law and that it will follow this model into the future? Are you almost at 100%? I know all models are
99.99%. We can, we can, even the planets, we cannot be sure, right? Because maybe we don't understand something about gravity. Maybe some star comes by the solar system, pushes the planet away. We don't know 100% nothing in science, right? But with the markets, even less, right? Because it's still human beings, and even if they are regular, etc. But see, the beauty, and this is one of the main message I want to give everybody, okay? So listen up. The beauty of recognizing this as a power law, if the theory is correct, right, and it seems to be correct, is that it is something intrinsic to the system. The system will not change. No ETFs, no China bans, no Joe Biden saying we cannot mine or whatever. No humans can change this thing now. And in particular, now more than in the past, because as the system becomes bigger, it's like, pushing an elephant or a whale. It's much more difficult to push a whale than a little mouse. As this system becomes bigger and bigger, it's more difficult to change. And it's going to do its own thing. It's going to stick to its own pattern, its own intrinsic pattern. So it's not just another model. This is what I'm trying to, because, after all, if some little math, it's very simple to do these regression models. I'm not a genius to do anything like that. I think I had some good intuition to focus on the power law, but the genius, and it's not just my genius, it's the genius of anybody that recognize this as an intuition, a moment of intuition, that we are dealing with something very fundamental about the nature of Bitcoin. And this gives you a perspective on everything. It becomes a philosophy. Bitcoin will continue to do what Bitcoin does. And so that this means that it's going to be predictable, that it's not going to change, we can count on it.
Meanwhile, crypto investors have pointed out how much of an adverse effect the Bitcoin ETFs have had on gold alternatives. On Wednesday, a TradFi portfolio manager and Bitcoin investor with the username BitcoinMonger took to his Twitter account to show the stark difference between the performance of the Bitcoin ETFs and their gold counterparts. His post reads, "It is incredible to see not just one but two Bitcoin ETFs with top flows in the last week. Do you know what is not present in the top 20? Gold. The disruption of gold by Bitcoin is going to come a lot faster than gold bugs think. Not only is Bitcoin sucking up funds, but gold is hemorrhaging AUM at an alarming rate across many ETFs. Bitcoin is going to drink gold's milkshake, and quite suddenly too. Renowned macro analyst and investment strategist Lynn Alden quoted Bitcoin Munger's tweet, noting that there is still some use for gold as an analog backup for Bitcoin, but that its glory days may be over. Her tweet reads, "Gold has an ongoing role as the best analog backup for a digital world, but I would be nervous if I half-only gold with no Bitcoin hedge. It's rough out there, and monies compete with each other." In a follow-up tweet, Lynn added, "To be fair, I wouldn't want to own Bitcoin and zero real-world assets either. Bitcoin is best for liquid emergent portable money, property, supplies, and gold for domestic analog stuff. Stocks are for growth and income, and Bitcoin is for global money, bonds for trading sardines and laughing out loud." What are your thoughts on Giovanni's predictions and the impact of the Bitcoin ETF tsunami on gold ETFs? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.